Eric's been really delving in with Azria. We're looking at doing a real estate broadcasting company.
Okay.
Where we're doing like regular content, 9 to 5, like Tuesday through Thursday or something like that. Like Azria.tv or something where we're selling sponsor promo spots, going over analytics, where residential pricing is and all that kind of stuff. Thank you, sir. That's super clutch. Oh, I needed that. All right, it is August 6th. We're here with Mobile Mailbox Money and Jim Hutelmyer, Jim of One Lending. Yep. Jim, if you could just introduce yourself real quick for the viewers that don't know you.
Hi, everybody. I'm Jim Hutelmyer. I'm a mortgage broker here in town. I've been in the mortgage business since 2001. Our company's based in Arizona, and I appreciate you having me on.
Yeah, no, 100%. You just recently made a switch from a different brokerage. How has that kind of big transition been? Any small challenges you've seen, or what's your take on that?
Yeah, so I've been in the business, as mentioned, since 2001. I started working at banks, eventually ended up in the independent mortgage world. I've always eyed the broker model, honestly. To me, I feel like it's the best thing for the client, the least overhead, which allows us to pass on the cheapest rates. But there's just been a concern, I guess, of the stability of the back end as it's kind of fluctuated with the market. Now we've got some major companies, UWM, and then Quicken, which are now the two biggest mortgage companies in America.
Sure.
They're both based as wholesale lenders behind the mortgage scene. So that adding the stability kind of really drew me to that, which resulted in me starting, kind of going off and starting my own company. And as far as challenges, I mean, when you own a company, there's a lot of things that come up behind the scene that you start dealing with that kind of pull you away from the day-to-day focus. But for me, at this point in my life where I've been, it's been a fun challenge. It's been kind of reinvigorating, and it really feels good to just kind of know you can offer customers the best rate. Gives you a competitive advantage. And it's been an adventure, but it's been exciting and it's been good.
For sure, yeah. Coming off of the lowest rate environment that we saw in recent history to the increases, and then the Fed's going back and forth at any given time. It's tough to know, what really is going to shake, I think, here in the near future.
Yeah.
So if you're looking for a mortgage, obviously hit up Jim Huddy here. He's definitely the guy to talk to. A multitude of different products. You're primarily focusing on single family, or what are your focuses and maybe some different products that you have to offer?
Yeah, I mean, so for us, it's always been residential lending. If you're looking in the commercial space, that's not something I don't consider myself an expert, so I generally refer that out. But anything residential is our wheelhouse. That does default to primarily single family homes, condos, townhomes. Second homes, investment properties become popular, especially where we live in Arizona.
Sure, top 10 market.
Yeah, I mean, it's a great, we have weather, right? Now, it's probably wearing on us locals this point in the summer, but people want to come here for the weather. There's always been a steady influx. So, products that we're doing a lot of right now that maybe weren't so popular in the past, DCSR is a investment loan vehicle where they just qualify them off the property itself. It's kind of underwritten a lot like a commercial loan, so you don't have to get into their finances. You just need to find a property that works for them, and they're pretty easy to qualify for. And then we're seeing a lot of what we call bank statement loans, which is generally going to be geared to self-employed borrowers. Sure. There's a whole balancing act when you're self-employed. One of the big benefits is you can really write your income down through the legal loopholes that exist. But then you go to buy a house and that paper income maybe isn't where you want it or need it to be for our purposes. Bank statements become very popular, easy for self-employed borrowers, allows them to drive their income down, save the taxes. You're paying a little more on a rate, but I mean, if you're saving 20, 30, 40 grand on taxes,
for sure,
paying an extra % in a rate, maybe that's $300 a month. I mean, that's a win.
So no, that's absolutely
a real popular product that we're doing a lot of recently.
So DSCR, is it DCSR?
DSCR.
DSCR loans, those are 20% down and comp on rental rates. So as long as the rent cash flows.
Yes.
Just in lay terms.
Yeah.
I'm not a mortgage broker, so.
I mean, in layman's terms, even the cash flow, there's a different rate you're going to get depending, is the cash flow positive? Is it closer to, like, they're going to analyze that. It's going to affect the rate primarily.
For sure, yeah. So that's an investment loan, obviously. Self-employed individuals, see a lot of people, they're trying to save on taxes. You know, who's not at the end of the day? If you own your own company, you know, there's a lot of people presented with that obstacle of either purchasing a home with their family, right? You know, and being turned away because it's an unconventional loan, you know, quote unquote, not unconventional, but different, you know, than the regular modus operandi. We've seen a lot of ITIN financing. Do you guys deal with international tax identification number programs?
We do. It's always been an option. They're not the easiest programs out there, to be honest with you. There's some banks like, you know, Canada, for example. Some of the banks here have a footprint in Canada that can help. But yeah, we do have ITIN options.
I mean, us being here in Arizona, high Hispanic market, you know, a lot of general contractors and people, you know, fulfilling the building that's going on here out in Arizona. Just to touch on that, I mean, the market here in Arizona is very, almost like a little bubble of what's going on across the country. We're seeing it's still a hot market. People are still moving here. Things aren't crazy.
Trigger word. I mean, what do you mean by a bubble?
Well, so what I mean by that is it's a case-specific scenario opposed to like other markets like the Midwest and things of that nature. Obviously, it's highly location contingent to get a barometer of what's going on in the market. And for me, I can only speak for our local market.
It does feel like Arizona, when you look at the charts, you know, in my case, I've lived it. We tend to have big moves, right? Like,
for sure.
You referenced the Midwest, those are smaller. They go with the market. Here, like Arizona tends to really go as an indicator, big highs, unfortunately sometimes low lows. But yeah, we are definitely, I would say, a market that's always got significant movement, it feels like.
What's interesting right now, I think from an investor standpoint, you know, obviously trying to either acquire a property right now is a tough thing to accomplish with where rates are and rental rates. You know, to get a property that cash flows right now here in our market
for sure,
is a tough thing to accomplish. People are looking at those Midwest markets, you know, but obviously that comes with some fair amount of risk mitigation because it's an off market. How quickly are you going to find a tenant if it's a long-term rental strategy? You know, those are all things to accomplish. And I think there's a lot of money on the side right now, especially because we saw a big shakeup in the stock market past couple of days. Crazy. They said it was the biggest sell-off in Japanese history. The Japanese whales were selling off a lot of stuff from a stockbroker buddy of mine. It's interesting to see what's going on in the market. What is your take kind of what you're seeing as a prolific mortgage broker here in Arizona? Maybe you could just touch on that lightly of maybe, you know, we saw the Fed just come out and hint at rate cuts here in September. And meanwhile, this whole year, they've been saying 3 rate cuts and they only did like 1. It's been up and down and here and there, you know. Anyway, what's your take on that? That was a loaded question, though.
And it's one I get at least once a day, if not multiple times a day. Obviously, this is an opinion. You know, the market's been interesting. I mean, having been in the mortgage space for 24 years now, I've been through a lot of different markets. The thing that's kind of I've noticed with this market, there's been a lot of fear, and it's been for a while now. A lot of, hey, I'm going to wait, it's going to crash type conversation.
For sure.
It hasn't crashed, you know, it's really just kind of steadily gone up. And I think a lot of what we're seeing now is, to your point, like the first time home buyer market, like that market where maybe you don't have a lot of money saved, you're newer to the professional field, trying to buy that first time house, I feel like is tougher than it's ever been.
For sure.
Right? But you get into also kind of a, you know, where it feels like we're in more of a have and have not market than I've seen, in the sense that if you've been in this market, if you own real estate, the stuff that has happened has been very beneficial, right? I mean,
for sure,
a lot of people are holding on to extremely low rates, and probably most importantly, the values have really gone up, right? And so, like, I know a lot of what you focus on is investing assets, building wealth, right?
For sure.
To me, a lot of people look at a home like, and obviously I live there, my kids may grow up there, you know, what's the proximity to my school, etc. But like, these are also, they're really investment vehicles. It's a place we all kind of, you know, if you're investing, you're going to park your money somewhere. And the hope is that you're going to get a, you know, a return on that investment. It's going to go up. But the real estate market has really gone up.
Appreciation's been big for sure, you know.
Big.
And there's those millions of Americans that are on 3%
Right.
rates. So that's a rate lock.
Yeah.
With a market shortage of residential property that's available out on the market.
Yeah.
Because of COVID, you know, they stopped building for like a year and a half.
Yeah.
They weren't issuing permits. It's like a perfect storm for the appreciation that happened, as well as people are crazy moving here still. The full gaming of the Vegas style gaming now in the casinos. Old Town's going vertical. You got the cranes still in Tempe. You know, there's a lot of
everywhere you go out here.
Crazy, right?
Keep up, it feels.
When you see all the fear mongering on the main television of the news and things of that nature, you know, there's a lot to paint being thrown at the board at the end of the day.
Another wrinkle that you bring up that I feel like, I mean, it's not new anymore, but like just kind of looking back at my career, like the way we take in news,
for sure,
the comfort that you can believe what you are reading or
for
being
sure
told, in my opinion. Now everything I read, I think, oh wow, and then I pause and ask myself, like, is this real? Like, can I believe this? Is this like a real source? And I think that's the new norm, frankly. And I do think there's, you know, agendas depending on where you're getting your news. Even Twitter, which, you know, or X now, is the most, you know, to the moment, and these are not professional but everybody's got an agenda, right?
No,
like
for sure. It could be a bot or something, or what, you know.
You got like your opinion on what it is you're commenting on. So that's been an interesting wrinkle, hard to figure out. I think that has probably elevated the fear levels around. There's obviously, you know, an election coming down the pipe, but I think the fear, but I mean, as an investor, the biggest thing that I would say that I've seen, this is me firsthand, is, you know, fear is probably the biggest detractor to people actually investing. I think a lot of people get caught up in trying to time markets, which is very difficult to do. But if you look at any chart, any like long-term thing, I mean, the biggest thing to me, I say this, I live it, I preach it, you know, it's time in the market over time in the market. If you can time the market, fantastic, right? Like, you know, I bought a house in 2007, turned out to probably be one of the worst, if not the worst, historical times you could ever buy. You know, like,
who would have known, you know, at the time?
Oh, I mean, it was a ramp up. You know, you just don't know. I haven't lived through anything like that. And I think people are still holding on to that, thinking it's going to happen again, which we don't know.
Which we're in a very different market than what was previously. I mean, just the 3% mortgage thing alone. Now the institutional appetite for single-family properties has exploded. They're trying to hedge the market outside the stock market. So they want to own 40% of residential properties by 2030. That's a big statement.
I think that
you're talking about billions of dollars.
You know, you maybe ask yourself, who are we competing against out there? But it does feel like, you know, no one can predict the future. This market feels very different to me. Obviously, what happened there, you know, I know like a lot of people consider this a tough market. It hasn't been a great economy for the last few years on a lot of levels. But I mean, compared to what happened, you know, you're younger than me. You probably weren't working during it. Like in 08, 09, I mean, that was brutal. I feel like that was our version of the Great Depression.
Sure.
You know, we've been dealing with high rates, high prices, but prices are also, they're record highs. The stock's at record highs. There's an affordability issue, I feel like right now.
State of emergency, they say. It's a state of emergency for affordable housing across the country.
Affordability issue. During that time in 08, 09, we had a how do I pay my bills issue, right? It's different than looking at that house that you want, or that car and say, I can't quite afford it. This was, how am I going to pay my bills? What's going to happen to our house, our belongings? Like, it was rough.
For sure.
So that's kind of helped a perspective for me, kind of being through that and just weathering that. And that, like that house I bought in 07, I mean, again, it was rough, but I held it. A lot of my investments I held when I could. And again, you get into, here we are 17 years later, they're way, way, way up. Now, it was rough to hold it.
Sure.
People will tell you in the moment, you got to sell, get out of that. That's the general mindset. But if you can push through and just, invest and hold it long term, I mean, that to me is the key to developing wealth.
That's the difference between a retail investor and a long-term, educated, long strategy, thinking about the long term and got the diamond hands, as they say.
The diamond hand. I think part of it, I don't want to, I'm not a stock expert, but I think part of that is part of the stock market crumbling. What I was reading, Warren Buffett, it sounds like, sold like a huge, he cashed out his portfolio on Thursday, basically.
Yeah,
right?
went to a lot to cash.
He's a guy who's super smart, knows the market, gets in and out. I'm none of these things, right? There's nothing particularly smart about me as it pertains to investing. I don't go in there and day trade, but like investing for dummies is get the money in an investment, some kind of investment vehicle.
For sure.
History of doing well long term, ideally blue chip stuff. We're seeing crypto stuff come out, but if you're in it, most blue chip stuff, if you're in it and you're in it long term, you can do well. If you have the knowledge, you're a Warren Buffett, you can get in and out. But I mean, him historically, though, him pulling all that cash out, from what I know about him, he doesn't stay cash for a long time. So I assume he's kind of looking for something probably to get back in the market.
For sure.
I think he's definitely someone who people follow.
For sure.
When he pulls a lot of money out, I think people panic. And when he puts a lot of money in, I think that's okay. There's some reassurance, but yeah, that was an interesting one, kind of waking up to that the other day, just seeing.
Yeah, no, a lot of red going on out there.
It's just been such a continuous, like, up, despite all the fears. So it was something I hadn't seen in a while.
Well, it's hard to know where to go. And I think a lot of people find strategy in like following like Warren Buffett, or there's these cool sites to follow where you see politicians trades and stuff like that.
Obviously. I know. I can say, I don't know. Everybody wants to know where she's been.
Pretty interesting, to see what big institutions are doing out here, from like BlackRock and Vanguard and all of those to make the best educated decision as an investor out in the market. There's not all that many avenues financially to make a savvy decision for a return right now.
You're speculating.
100%.
I mean, you're speculating.
100%.
Yeah.
It's all a mitigate. Where are you mitigating your risk for a secure return? Are you going for a higher return and a more non, structured strategy, or are you trying to mitigate your risk in CDs and making a 3 to 5% return? Or, I think there's a lot of people that are looking for, really where are they going to go? What's the next, big thing? And it's tough being priced out by institutions for single family, multifamily. You have the sliding interest rates for commercial property acquisitions. They bought on 4% mortgages and now they don't cash flow. That's a problem if you've invested in multifamily properties, or if you're even just someone trying to house hack. There's not all that many options. And in an environment where it's highly pressurized, it's an election year, Trump almost got assassinated, not saying I'm going either way, but just to see what's craziness is going around in the market, from Bitcoin to interest rates. It's like every week we're just like seeing some crazy things happen out in the market, people reeling in or going in, and it's tough to know where to go. And on the Warren Buffett thing, we do mobile homes, right? Manufactured housing, personal property, mobile homes, and a note strategy. Have you ever been to like any note conferences or anything like that? It's definitely interesting because it's not as educated much about, but as like in mortgages, everyone wants to be the bank, right? That's the passive strategy, to just collect payments, and not have to so much worry about it. In a perfect world, right? That would be the program.
The bank is great when the economy is doing well and values are going up.
For sure.
It's not great.
No, 100%. Yeah, it's definitely important to figure out, ultimately, like in notes, what the asset is secured. What's the note secured by? Is it Is it a merchandise, secured? Is it a loan for a small business?
Yeah.
Is it a single family, multifamily? Is it manufactured housing?
Yeah.
There's a lot of avenues in being the bank of participating in like a strategy like that. It's a tough decision when cash flowing is either at break even or negative because of where current rates are, right, or you're fighting to go to a Midwest off market where you may not have construction, connections and management and things of that nature. And, I think manufactured housing kind of fits where the market's going, because the lack of residential properties that are available. Median single family pricing is like what, $450 right now for here in Arizona.
Maricopa County.
So, that's to qualify for even say $375 to $400, you have to make like $70,000 to $80,000 a year with no debt.
Roughly, yeah.
How many people have no debt and make 70 to 80? There's not all that many individuals. It's a tough.
This gets back to the first time buyer.
For sure.
Like if you've owned houses, presumably they've appreciated. The typical person is going to sell to buy, move the equity from one to the other as a down payment, which makes it a much different, more affordable
for sure
transaction than, say, the person who's 25 years old, went to college, got the degree, got the job they wanted. But, at that age, most people are going to probably end up having to climb up.
For sure.
And so I do feel like 20 years ago, that person probably could go out, buy a house. We still have no money down stuff. We still have low money down stuff. But this gets back to the affordability. And I think what you're getting at and where you see the opportunity with mobile homes right now is back to that affordability
100%
piece of the puzzle and kind of getting, like owning something, right? And it's, where the prices have gone, and unfortunately the income has not kept up with it. And this is where, I feel like, for me, going into mortgage, being in mortgage, I'm always in conversations. I remember my dad would say, "Oh, I hear the market's not good." I just believe people have to control what they can control, consume themselves with what they can control, right? So if you want a set of things, right? I've gotten to know you. You're a hustler, right? You're especially for someone your age, you are actively pursuing things. You're not afraid, right? But to control your destiny and be able to not be a victim of the affordability and what's going on at a government level, all those things. The best thing you can do is make as much money as you possibly can, take risk, believe in yourself, invest. So make as much money, which leads to saving as much.
For sure.
Because I've been through it. And you know what hits the fan? It's not about how much you make. It's about how much you have.
For sure.
Just going after it aggressively, investing, believing in yourself, and try to just not let those outside factors really end up affecting you. That's, I think, the best thing people can do. Because markets, they're just going to go up and down. Prices are going to go up and down.
For sure.
You can control how hard you go.
No, 100%. It's important to, be proactive about where you want to be and the things you want, but also take a mitigated risk, at the end of the day.
Yeah.
Don't be caught with your sheets to the wind or whatever,
You don't want to, but there is risk with investing, right? It's the same conversation.
For sure.
You're the young person, you talk to that person who has this and that, and you're like, you want it. Now that person probably took risks, and, real estate, that's what I do. Most times it goes up throughout my career, but we've seen one really, really brutal.
For sure.
Where it didn't, and that's just how investing works.
No, 100%.
It's going to go all the way up. You're just going to have to, deal with the risk. But I think that's an important piece in chasing wealth, is being willing to take that risk.
Yeah, no. Me being young, I try to follow obviously the forefathers of investing.
Yeah, what do you reference? Where do you get your investment stuff?
Great question. Yeah, so I attend ASREA, Arizona Real Estate Investors Association.
Yeah.
They're the largest real estate investment association in the country.
Okay.
So they take local analytics from investors from rental rates to days on market to all that kind of stuff.
Okay.
I also follow Warren Buffett.
You do?
So Warren Buffett owns Clayton and Cavco, the two largest manufacturers of mobile homes in the country. They have factories here in Arizona.
He owns a lot of stuff we don't know about.
He owns 21st Mortgage.
Yeah.
21st Mortgage did 90% of the manufactured home loans last year. No age restriction.
Okay.
Any personal property mobile home,
Yeah.
he's lending on here in Arizona at like 25-year mortgages.
Because as you know from conversations we've had, I mean, the general Fannie, Freddie, the government-backed mortgages, they've got some hang-ups with those types. So again,
For sure,
if it saw an opportunity.
it's a negative connotation. The cities don't like mobile homes so much. They don't allow you to develop manufactured home communities. And meanwhile, it's a state of emergency for affordable housing.
Yeah.
Where's the give? Okay, well, you got people building multifamily properties, but with high labor and material costs, by the time that comes online, it's $2,200 a month. That's above average rental rates here that's not affordable housing.
Yeah.
So I think there's a big switch in mental mindset
Yeah.
of like that asset class in particular. We saw a historic deal like 2 years ago of a acquisition in mobile home parks. It was like Cobblestone, I think it was.
Okay.
They paid $250 million for 6 communities just in Mesa.
Like Cobblestone, the car wash company?
No, it's like a hedge fund, investment house. I think that's what their name was. Anyway, it was a historic deal of acquisition. That just shows, I think, the mindset switching now to this strategy as more of a palatable long-term cash flow in affordable housing. You know, it's fitting a need on one hand,
Yeah.
and depending on the market, obviously, it's highly location contingent. I think it creates a great long-term strategy outside the stock market.
Yeah.
You know, when you're seeing high volatility, maybe someone's a busy business professional, right? And they're wanting to do long-term strategies, and they don't want to pay attention so much to the stock market. They're okay with the note contractually agreed upon return.
Yeah.
I think that makes sense. Granted, you need to be important to mitigate your risk in anything upon an acquisition. But I think that's where the market's kind of going. You know, there's this new frontier of investment and institutional appetite into different alternative asset classes, because the bloodshed in the stock market, for one thing, as well as they've already been buying single family properties to hedge the market, you know, and create almost like a new frontier for their strategy, you know, into, like, we saw Open Door buying crazy properties and all these e-buyers. And anyway, I think that's something worth conversation for investors, maybe because that's what I do, you know, here and there. But
I mean, I think a part of it too, it's like affordability is like, I remember like when I was like college age or whatever, like I feel like every guy there's a car we all want, right?
For sure.
I've got this dream car, let's say, right? I couldn't walk onto the lot and buy that car and make the payments on it when I was 19 years old, right? So I had to get the car that I could afford.
for sure.
And I mean, I just feel like if you want to pull all of it, you simplify it. I mean, that's, you know, to your point, I think that's where the mobile homes and just, it's an affordability, like you need somewhere to live, rent's high, buying's high. So to me, you know,
Great
wherever
points.
you are, you got to start somewhere, and then that's just, I mean, it's
Where's an individual to go if they can't qualify? Are they just to rent for the rest of their lives at the end of the day? Like, is that the only answer? That's crazy. That's tough. That's a tough pill to swallow when you have 2, 3 kids or whatever, you know, you want a home, you know.
Rent's high too.
Yeah,
That's
no,
the
for sure.
thing. Like, it's not like, oh, well, I can't afford to buy, I'll just rent. It's like, whoa.
That
Rent numbers are based on what a mortgage payment a lot of times would be. So
for sure.
that's where I do think your company, you have really kind of, I mean, I know you're not new to this, but I think you kind of identified something. I really think, looking back now, the time I've known you, probably got ahead of it, honestly.
No,
I knew that it was going to become a need for people, so to speak.
I mean, if we can give someone ownership in a quality home, no graffiti, there's no weeds outside, they got city water, sewer, trash, they may have a play gym in the park, a pool, If they can own that home for what they pay or lower than market rent, that's a win.
Yeah.
That's a super win. Not only emotionally satisfaction for like the person buying the note, but they also get a higher than average return for participating in a non-conventional investment strategy, but also are participating long-term, and backed by an asset outside residential real estate in the stock market. There's not all that many places to park capital, and feel comfortable about making like a 5% return on average long-term rental rate.
Are you talking note or are you talking property value?
So I'm talking purely note.
Okay.
So if an investor goes in and buys that note, they created a homeowner, right? They cash flowed in 30 days. There's the opportunity to do that. If someone doesn't make a payment, that happens. But obviously we're qualifying them. They want to buy the property. They fit a criteria of like over 600 credit, verifiable income. Their ability to repay is satisfactory, right? So it creates a bank quality note whereby if you were to try and buy a SFR down the street, you'd be probably $100,000 out of pocket, 20% down payment with some fix-up fees potentially.
It's a sliding scale. I mean, you can do these. You can buy these houses with no money down, but I think, the payment, you get back to the prices, the rate. It's like, are you comfortable with the payment?
For sure.
Some people are, no problem. They just don't have the savings. There's all kinds of loans out there for that. But to your point, I think it's an it's just, you get back to the affordability thing. Every combo kind of leads back to that.
For sure.
I mean, as far as the mobile homes, obviously it's pretty out there. The single family, they've really appreciated significantly. Sure. I mean, what are you seeing as an appreciation? To me, that was always one of the things that I was told about manufactured homes. They don't appreciate.
Great point.
They don't have as much upside.
Great point.
That's your wheelhouse. I mean, what is going on there? What have you guys seen over the last 3-5 years?
So from COVID, mobile homes appreciated for the first time like ever.
Okay.
So they are a associated depreciating program, right? So highly location contingent. So depending on the desirability of the area and the replacement cost of that home will dictate how fast it depreciates. Obviously, if you own a mobile home in Alabama on one lot out in the boonies, that property is probably going to depreciate a lot quicker than being off of like Kyrene and Baseline.
Car, I mean, when you say it will lose value over time.
So
the expectation.
Yeah, it could, depending on where it's located.
Okay.
So for sure, it's not an appreciating asset like residential property. It's not. Even now. The important factor is understanding the dynamics of the buyer market and what choices they have available out in the marketplace. Because that creates a high demand for that location as well as the quality of that home. So depending on the available market for housing dictates price point of that home. These homes are like 1980s homes that I like buy. And the price points for a larger home, like 3 to 4 bedrooms in Tempe could be $135,000, right? It's a 1980 home. What did they pay out the factory for that? Probably $40,000.
Oh, okay.
They paid $40,000 in 1980. It's 2024. That was 40 years ago. The property's worth $123 because the location and some light renovations that we've made.
Value's really, what you're saying is in the land in that.
It's the location. So it's a complemented price point. Because you're not seeing appreciation with the lot, right? But you're seeing the demand for a desirable area and high population density, where purely people are looking at these properties because they can't qualify for real estate. Purely. Where historically mobile homes was someone was trying to find the most cheap, most cost efficient, on Social Security, bottom dollar. These are people that just can't qualify for real estate for whatever reason because of lack of tax document or they don't fit concrete criteria to secure secure financing through conventional banks.
Yeah.
There's some private finance out there. I've seen like some companies in Texas that do private origination.
I know they're out there. Yeah. Yeah.
But, it's an interesting thing to try and, figure all of this stuff out at the end of the day. I try and hedge my bets as much as I can in a need. Yeah. And people need affordable housing, and I follow Warren Buffett.
Yeah.
I'm not, be turning 30 next month. We were talking about that. So I haven't.
Potential midlife crisis coming down. I think you'll be okay.
Yeah. Appreciate that. But, it's important to kind of take all these factors into account and make the best educated decision that one can make. And if you're following the right people with the right mentors and the right groups, we know each other from Business Network International. We show analytics back and forth here and there. Love hearing your updates, really do.
Thanks.
When you bring them up, I do.
I assume no one cares.
No, listen, it's important to realize where the information's coming from.
Yeah.
From Arizona Real Estate Investors Association to BNI. This is real boots on the ground business.
Yeah.
That's in the face of the market, opposed to watching CNN and listening and taking their word for it.
Right.
You're actually doing deals. You're hearing people, investors, private capital, first-time home buyers. This is the real through the phone, display of actually what's going on here in the market, opposed to trying to take some Pfizer investment into CNN and they're trying to sway or whatever.
Yeah.
May not want to say that too loud, but but yeah, it's a tough time. I'm sure you're seeing the same.
I mean, it's a tough market. I think everyone in real estate would acknowledge it's a tough market. Again, like I look at things in a relative sense, right? I've been through a lot worse, right? Like,
for sure.
Rates are high now. That makes it harder to sell properties, harder to sell mortgages. It's gonna, the price is gonna shrink the pool. But, I've been through significantly worse. I mean, in '08, like almost every call I got was people I had done mortgages for, most of them, upper middle class to very wealthy, frankly. And it was, hey, like, I don't know what to do. I'm losing all my money. I'm losing my house.
Right.
Divorce. I mean, it was brutal. So I feel like what we're in now is a difficult market, but it's not a just disaster, right? It's just a tougher market. But like anything, with what I do, what you do, what realtors, commercial, all of them, like if you're good at the job, right? I mean, you just keep grinding, you relay the information. There's gonna be clients out there. It's just a smaller pool.
Yeah, for sure. People are always buying at the end of the day.
Yeah,
How many, that's speculative, but there's definitely people buying. If some people have to move, they got a job, they blah, blah, a recent death in the family or something of that nature, or they need to refi and consolidate bank debt, credit card debt.
That one, the refi market's an interesting one. I mean, pivoting to that real quick. I mean, it's like a lot of people have a lot of equity in their house.
For sure.
A lot of people have a really low interest rate on their house that is significantly below the market value. But what I know is happening, and some of the calls I'm involved in and stuff you read, is we have a consumer debt problem. And credit cards are very dangerous.
All-time highs, I hear.
Yeah, I believe so. Credit cards, as long as I can remember, I mean, they're double digit. And I know I Googled this not long ago for something I was going to talk to someone. I mean, I think the average credit card rate's like 18 to 20% off the top of my head. I mean, you can Google that. It's high, right? So in my world, I'm in a lot of, rates are high. It's a very general statement. Rates are high.
Sure.
I mean, a 30-year fixed.
And relative.
It's a very relative thing. I've looked at rates today. A 30-year fixed mortgage, I quoted one at 6.125. They're in the low sixes. Credit cards, 20%, right? And frankly, most people are not buying an appreciating asset with a credit card. So right now, like, I actually think there is somewhat of a market to consolidate debt into a mortgage, even if you're going to increase the rate. People go home equity line of credit heavy in markets like this. I've been through these before, but unless you have an exit strategy, that's just another credit card. Those payments fluctuate. They're interest only if you make the minimum payment. At least with a mortgage, you have a fixed amount that doesn't change, which gives you a budget. and the interest is tax deductible. So I will say, if anyone's out there, because credit card debt has a feeling, I don't know if you've ever been,
Haven't had the chance.
You want to avoid it, but I mean, I have, where you're like, you can't pay your bills, you're paying the minimum, and you're paying a ton of interest every month just to carry the minimum.
For sure.
That's the kind of stuff, it's tough to sleep at night. I think anyone who owns a house who's in a debt situation with credit card like that should look at consolidating all that. I really do.
Yeah, no, if they're interested, credit one lending. One lending,
Jim Hutelmyer. But yeah, I think there's some avenues out there. But, the equity in the house is always an interesting position. And I've never seen people more kind of, I guess, afraid to try to tap into it. And that's back to those low interest rates. So it's presented. I feel like the Fed they went too low. I feel like the Fed tends to just overdo things, right? Like they didn't really need to probably put rates at 3%, high twos, whatever it went to, probably unnecessary. And now there's just it's like a boat leaving a wake, right? Like we're all dealing with that wake now, and it's just been kind of interesting to watch. And I think there's still some runway there. We're going to see how that all unfolds because, it's like, in our world, there was always the parents, the kids move out, right? Like, hey, let's downsize. Well, that market's dead because you're going to pay more money if you have a mortgage to downsize and to keep your current house. So there's just been some interesting kind of repercussions of that whole thing, getting those rates so low. I mean, there's obviously some nice benefits to it too. I have them on my house. It's great in that sense. But
yeah, no, for sure. Well, hey, we got Jim Hutelmyer here again today. Appreciate your time. We met at Business Network International. Definitely seen some great growth there.
Soon, right?
Should be. We'll have a group masters trip maybe. You never know. But hey, just real quick to let people know where to follow you. You said onelending.com or
it's
let them know.
Net. So onelending.net is our website. One Lending on Google. Jim Hutelmyer. Should be easy to find at this point. Just Google me. But yeah, if anyone has mortgage questions, just want to kind of get a straight answer on how things are as a broker, again, our model is to provide people with the best rates, the lowest payment. Combine that with my experience, my team, and what we've done, just running kind of big business throughout the years, but moving that into the broker world to combine the best rates, give them the best service, and just our wisdom and our knowledge to get things done.
So if you're looking for an investment loan, DSCR, first-time home buyer, no money down, you're medium qualified or whatever it may be, hit him up for sure.
Don't overthink it in your head. If you're interested in finding out what you can do as it pertains to a mortgage, it's free to talk to me. It's free to talk to us. Let us give you just factual information, what you can and can't do, and then from there you can make decisions. Don't spend too much time talking to your neighbor you're taking the garbage out. He or she's telling you everything they know. They're professionally not in the real estate industry. Call us. It's a free consult. We'll be happy to kind of tell you everything looks and what your options are.
Boom, boom, boom. And I'm Alden Guajardo with Mobile Mailbox Money. That's analytics. We talk to other prolific business professionals in real estate. We're talking about what's going on in the market. If you're looking at joining in on the channel, come on out, comment, like, follow, and subscribe. Have a great day. Jim, appreciate it.
Thanks, brother. Appreciate it.
Bam.